Good morning, everyone. It's one day late for Rabbit, but I figured since the first of the month was Easter and a Sunday, that you might forgive me if I postponed it until the 2nd of April. I also didn't want you to think it was an April Fool's joke if I put something up yesterday. How crazy that it all came together on that one day, right? So today's topic is very thrilling. It is employee benefits. I talked to so many people who, when I ask if they have life insurance or disability insurance, they say, oh yeah, I think I have something through work. So I just wanted to go over a couple basic things on how the common employee benefits do work for you. I'm going to give you a little bit of information and some questions you should ask about your own benefits or those of your loved ones, a spouse, parents, kids, to help them really understand what they may or may not have through their employer. So the first topic is life insurance. It's one of the most basic group benefits that you get when you work for an employer. So it's the type you get there is called group term life insurance. So what do these things mean? Group means you get it because you're a part of the group. And that means they don't ask any medical questions, which can be very good if you have a difficult time getting insurance on your own. But what that also means is when you're no longer a part of the group, meaning when you don't work there anymore, the insurance coverage and protection is gone. So you want to keep that in mind. Term insurance is the temporary type of insurance that only pays out if you pass away during the term. So if you retire from the company and die 2 months later, no life insurance coverage because it's not during the term of the coverage. So the next question to ask is, how much do you have? And it's not a given, right? You need to read the benefit booklet, or usually those things are online now. A very common amount is 1 times your salary. But if they provide more than $50,000 of death benefit to you, there's a little taxation. So some companies only do the $50,000. I've seen 1.5 times salary. I've seen all over the board. But it's definitely important to know how much you've got and then double check your beneficiary. If you've worked somewhere a long time, you might have signed up and done your beneficiary designations years and years ago, and things may have changed in your life. So check your primary beneficiary, check your secondary or contingent beneficiary, which is, God forbid, if something happens to you, who else gets the money? Many companies will also offer voluntary extra group term life insurance, meaning you can choose to pay for some extra on top of what you already get for being an employee. So that's something to check out. It's usually very easy to do, fairly inexpensive, although you may be able to get cheaper insurance if you're healthy on your own. And remember too that this voluntary extra insurance also goes away if you leave the group. The next benefit I want you to look at is disability insurance. There are 2 basic types. Short-term disability, which covers you if you're too ill or injured to work for the first 90 or 180 days. And then long-term disability, which kicks in after that period. So starting at day 91 or day 181, usually 90 days is the wait period. And then it can continue as long as age 65 or 67. So check that out, see what you've got. A very common amount to be provided by your employer is 60% of your salary. So what that means is you take your salary, not any bonus or other extra compensation. Salary, take it by the month, and then 60% of that amount is the disability benefit you would get. But keep in mind that that benefit would be taxable to you if your employer is paying the premium. There are some companies that swing it where you actually, on your tax return, it looks like you're paying the premium, and that way the benefit would be tax-free to you, which makes a big difference. If you're going to take a 40% cut in pay, it's nice if that pay is then all of a sudden not taxable. So the question to ask yourself is, can you live on that, right? A disability could last for maybe just a few months if you're going through some treatments for something, or it could be debilitating and last the rest of your career. So it's important to know what coverage you do have. Disability is also something where you really need to read the fine print and understand what the definition of disability is. Usually with group disability, so the kind you get from work, the definition is, if you can't work, we will pay you. Meaning if you can't do almost any job. Sometimes it will say a job that is suited to your education and experience, but that still can be very broad. Whereas If you get an individual policy, so you can go and buy an extra policy on your own that would cover an additional amount, that usually says if you can't do your job, or you can get a special option that says if you can't do your exact profession, then we'll pay you. So it's possible to have a situation where your individual disability is paying even if your group policy is not. So that's something you really want to understand. So 2 very important benefits: know what you have, know what your spouse has. If you are self-employed or don't work for a company that provides these benefits, it's something you want to look into getting on your own. And then, of course, there's a lot of other benefits. Your paid time off, your vacation, education benefits, all of that stuff is important to understand. Your match to your 401k, if you've got one, when you're looking at a total benefits package. So that's my rabbit for today. I wish you all a very wonderful and lucky April, and I hope to see you soon. Bye-bye.